Welcome. Subscribe to AS Foundation, India's leading academy for CA course, and hit the bell icon to get the latest updates. Thank you.
Come to the next chapter, credit rating. Very important topic. Why very important? Not only for your exam, but after you qualify, there is a big opportunity in credit rating companies for CA students. Okay. Many of my students have now joined either CRISIL or ICRA or CARE, three leading credit rating companies in India. When I spoke to them, they said one of the criteria of selection is, again, you have to be either a merit holder or at least the first attempt candidate, at the most 2 attempts. Okay, one group 1 attempt, one group 2 single attempt, or you should have passed both the group in 1 attempt, because the task involved in credit rating company is very serious. It requires in-depth understanding, research, hard work, integrity also, because you get to know a lot of client information, and then you should be willing to work hard, travel a lot, and then they give you a good position. Last year or before that year, one of our students got the industrial training in one credit rating company. You know, last 1 year can be done as industrial training, where you work with a corporate. And then that girl told me, sir, my stipend is only 25,000 rupees per month. From some few thousand, I moved to 25,000 rupees stipend. Then after qualification, 7 to 8 lakh rupees normally they will provide you, okay, to start with. And then as you show your performance, you'll get very high salary. So what do these credit rating companies do? What is the meaning of credit rating? What is the process of credit rating? What is the importance of those symbols that we see in a bond or debenture issue? So in this chapter, we'll see which are the important credit rating companies in India, and 3 important credit rating companies of the world also we are going to see. Which are the 3 important credit rating companies of the world? Standard and Poor, Moody's, and Fitch. Okay. So now first is, what is credit rating? What is rating? Rating. Suppose you want to go to a movie. You have to pay about 300-400 rupees per ticket. Is it right? So do you directly go to the movie first day, first show? Or do you go on Saturday or Sunday? Sunday. Before going, do you check the review? Or without review? With review. Suppose the review is 1 star. Yeah, I will go. No. 4 star out of 5. You'll go? Yes. 5 star. Again you'll think over. Wait, they are manipulated, that is secondary. But first you tell me, if you want to go to a movie and if many movie reviewers have given 5-star rating, you would more or less like to go. But if more and more reviewers have given 1 star only, 1.5 star only, you don't like to go. That is a rating of a movie nowadays. Because you are putting so much money and time, so you want to get value for your money. For a movie of 200 rupees, you are thinking so much, you are reading a lot of reviews. You are reading review in Times of India, Hindustan Times, Indian Express, then some YouTube reviewers are also there, all those people. Okay, I don't know. And then nowadays there is one more review on YouTube I have seen. People are coming out of theatre hall, they are thrusting that mic in their mouth, okay, and they are asking you how did you like this movie, etc., etc., because that will be a more genuine kind of feedback. Okay, then you go. Now you are investing 20 lakh rupees in a company. Don't you think you should also do some similar exercise? Don't you think you should check whether the company will be able to pay your principal and interest in time or not? Yes or no? So there also we have a rating, but it's not a movie rating, it's not a hotel rating, it's not a product rating normally, because ratings are there in many fields nowadays. A rating of hotel is also there, restaurant is there. Okay, on Zomato you see the review of the people about a restaurant. Then there are some TripAdvisor where you get review of the hotels. So when you put some money, 5-10,000, you are doing so much exercise. Don't you think you must also take the rating of the instrument where you are investing? And since you are investing big money here, it's not 200 rupees movie ticket. Even if the movie turns out too bad, it's okay. You have not lost a big amount. 200 rupees is okay. But here you are investing 20 lakh rupees or 10 lakh rupees or 2 crore rupees. If that goes bad, it's a serious loss. So therefore, world over now, whenever the companies want to raise money from the public, they would generally require the company to get the issue rated by a reputed credit rating company, not any YouTuber, okay, not any Facebooker who will review on their own whatever they want to say, but it has to be a reputed credit rating company run by professionals having a certain standard, and based on that the investor can take the decision. So that is credit rating. It gives you, basically credit rating means the ability of the company to pay their interest principal on time. Nowadays there is a credit rating of individuals also, that is called credit score. Because when you go to the bank to take a loan, they will not appoint CRISIL for you, but then they will find out your credit score, and then accordingly they will decide whether this fellow should be given loan or not. That is called CIBIL, okay, credit score they give. So in this chapter we'll see credit rating, and like earlier chapter, private equity, investment bank. This is also an area where as a CA student you can find job opportunities, because they require a lot of skills in terms of analysis of balance sheet, P&L account, etc. And after this Ind AS has come into India, many MBAs find it very difficult to understand the balance sheet. So CAs have got an upper hand now as far as areas where balance sheet, P&L account, cash flow statement, notes and financial numbers are required to be interpreted and analyzed. Okay. What is credit rating? Credit rating means, as I said, you have to check whether the company will be able to repay interest and principal in time or not. It means an assessment made from credit risk evaluation, translated into a current opinion as on the specific date on the quality of a specific debt security issued or on the obligation undertaken by an enterprise, in terms of the ability and willingness of the obligator to meet principal and interest payment on the rated debt instrument in a timely manner. So the summary of this big paragraph is ability of the entity to repay the interest and principal on timely basis. That is what credit rating tells us. So how do you know whether this company will be able to repay or not? So they have designed a system, and that is called symbols, which we will discuss later, each symbol. Like for example, if it is a long-term debt instrument and if it is rated AAA, then it is the sign of highest safety. Sign of highest safety means the chances that the company will default in payment of interest and principal on time is very, very low or negligible. Highest quality debt instrument. And as the risk increases, they will make it AA, A, B, C, D. This is the other extreme. Risk of default is high. Okay, risk of default is high. So credit rating will be done at the time of issue also. But nowadays they are required to periodically review and revise also. Because situation which was true 2 years ago may not be true now. Is it right? Not only there are credit rating of companies' instruments, these international rating agencies like Moody, S&P, Fitch, they rate a country also. They rate a country also. So some years ago, some months ago I think, month, India's credit rating was downgraded. So what Indian politicians said, these Moody's and these all are all stupid people. They are just the puppet of US government. But before some years, this Moody had upgraded also India's ranking. They said, see, now we have arrived on the international market now. Even the international credit rating companies have accepted that India is a growing nation, strong nation, developed nation, etc., etc. So the politician will change their statement according to which direction these rating agencies give the rating. Okay. So this is credit rating. They do many other services also. We will see after some time. It's not just credit rating. If you join the organization, nowadays they're involved in various activities. Many of the activities we saw in investment banking chapter also, like raising of funds, arranging for the deal, M&A advisory, restructuring. Okay. So even many other activities relating to corporate finance is handled by another division of credit rating companies. They do equity research also. They do advisory services also. So what is credit rating? Point number 1. It is an expression of opinion of a rating agency. Rating agency is giving its opinion. So in every credit rating they will write that this rating has been given by CRISIL. This rating has been given by Moody's. This rating has been given by ICRA, etc. Okay. So it is their opinion. In their view, this is the risk involved. The opinion is in regard to a debt instrument. Normally, which instrument is credit rated in India? Debt. Debentures, bonds, fixed deposits, commercial paper. All such instruments are compulsorily credit rated in India, but they can rate other instruments also, which I will show in the next few paragraphs. They can be had for rating of some special insurance products also they rate. Many things they do the rating nowadays. Debt instrument is the main one. The opinion is on a specific date. Same credit rating is not applicable for the 5-year bond. So they will write that this opinion is given on 1st January 2020. It is not applicable after 5 years, 1st January 2025. By that time, many things would have changed. Then the opinion is dependent on the risk evaluation. They are not evaluating the whole company, keep in mind. They are only evaluating the risk involved in that particular instrument which they are rating. Many people think if credit rating of debenture issued by Reliance is a little poor, Reliance industry is bad. That is not their intention. What their intention is, the debenture issued by this company has this risk. Okay. And according to the risk involved in repayment, the rating is given. Nothing else. Their scope is only to give you an evaluation of risk involved in repayment of principal and interest. They are not giving any other opinion, which people misinterpret. If some rating is good or bad, company is not necessarily good or bad. It is the instrument which is good or bad. Point number 5, the opinion depends on the probability of interest and principal obligations being made timely. So what they will do after their analysis, which also we are going to learn how do they do it, they are going to assign credit rating symbols. And based on that, the investor will be able to understand that whether the risk is high or low. Why do you think credit rating is necessary? So that he can take a informed decision. Am I right? If you are a normal investor, let us say you have 1 lakh rupees, you want to invest in the debenture of a company. Do you have so much time? Okay, you have time. Do you have so much intelligence, knowledge? He says yes. You have time. What about VK? Virat Kohli. Okay. He has 100 crore rupees to invest, but he does not have time, energy, resource and knowledge also. Hardly passed BCom. Not passed. So BCom fail. He cannot do analysis of company's annual report. He can't read Ind AS based balance sheet. We can't read. What he will do? He will require credit rating. So Virat Kohli will simply see what is the credit rating of this instrument, AAA. He will ask Anushka, go ahead, sign the check. Okay. Why he will ask Priyanka Chopra, Nalayak? Such opinions are relevant to investor due to increase in the number of issues and in the presence of newer financial products. Investor does not have time, energy, knowledge, expertise to take investment decisions, especially in case of debt instruments. And therefore, the role of credit rating becomes important. Which are the instruments which can be rated, like for example, asset-based backed securities. Means all debt securities which are where asset is given as security, debentures and bonds, and credit derivative also. Now you will ask, what is credit derivative? Write a small paragraph. We have in our syllabus chapter number 15 coming soon, where credit derivative will be covered in detail. But today only write down this much. A type of derivative we'll discuss in detail in chapter number 15. A full chapter is dedicated to credit derivative. A type of derivative in which the risk that the loan will not be repaid, is sold to a party other than the lender. So it's very simple. Credit derivative. Credit here means, suppose you have given loan to somebody and he will not pay. So there is a risk involved. So you are transferring your risk to another party who is willing to take a risk. That is like an insurance product. So that is why I have written one more line to further convince you, to make the concept clearer. Credit derivatives act as insurance. It's like insurance. Those who have risk are transferring it to others who are willing to take the risk. And in business, credit risk is high. People may not pay. Credit derivative act as insurance for a company that invests in a corporate bond or loan. More about this later, but for the timing, just understand you are protecting yourself from the risk of credit defaults like loan, bonds, where the counterparty may fail to pay. Okay, now credit rating does not in any way linked with. Now see the next paragraph, which is again I would recommend you should understand first better. Credit rating does not mean performance evaluation of the rated entity. I am not commenting on the performance of the company as a whole. I am only recommending whether this particular instrument has low risk or high risk. It is basically rating of instrument, and that too the ability to pay interest and principal on time. I am not commenting on the performance evaluation of the company unless the objective of the credit rating is to comment on the performance evaluation of the company. And second, investment recommendation by the rating agency to invest or not in the instrument to be rated. It is related to the instrument which is being rated. It is not a recommendation to invest in the shares of a company. Is it right? Although there are advisors or the brokers who can misguide you, say this is a AAA rated company. No dear, you are misguiding him. AAA rating was given to that bond or the debenture which was issued by the company. It was not given to the company. So therefore whatever recommendation they are suggesting is for the instrument, and third is legal compliances by the issuer entity through audit. Credit rating also does not ensure that the company has complied with all the legal compliances. I am not guaranteeing you that. I am only not guaranteeing also. I am only suggesting that this is the risk involved in this instrument. I don't guarantee anything. Credit rating does not guarantee anything. In case if somebody is trying to sell that product, he is misguiding you. They only tell you, in our opinion, this is the risk involved in this instrument. Is it right? So opinion on the holding company, subsidiary or associate of the issuer entity. If they have suppose rated a 5-year bond, they are not evaluating the holding company of that company. They are not commenting on the subsidiary of that company. They are not commenting on the associate of that company. So an associate company can't take the credit of AAA rated bond issued by the parent company and say, see, we are the associate of that company. He is misguiding you. Okay, and you in future, if you work with credit rating company or you are selling a financial product, you can't guide the investors like that. Okay, the SEBI will penalize you. You can't do mis-selling, wrong selling. It should be noted that rating is a continuous process, and as new information come, an earlier rating can be revised. It's not that the company has taken a good rating and now they can do anything they want. What these credit rating companies do now, they will review the situation again after say 1 year, and if in their opinion the rating has gone down, they may downgrade that instrument. They can, so that investors' interests are taken care of. While the rating is usually instrument specific, certain credit rating agencies like CARE, name of the company, CARE, Credit Analysis and Research. The name you will find it somewhere below, don't worry. Credit Analysis and Research Limited. It's a listed company now. undertakes credit assessment of the borrowers for use by banks and financial institutions. Let us say you go to SBI and you say we want 50 crore rupees loan. Or you go to an NBFC, Tata Capital Limited, you say we want 100 crore rupees loan. Now they may not have necessary expertise to do the evaluation of that borrower. So what they do? They outsource. They will appoint CARE, CRISIL or any such agency, and then they will check the ability of that borrower to repay the interest and principal in time or not. So they can do rating of company, but subject to it's a specific assignment given to them by a bank or an NBFC or a financial institution. So what do you mean by rating service? What do these credit rating companies do? Okay. So I will first give you credit rating service provided by CARE, a company called CARE, Credit Analysis and Research Limited. Similar services are provided by other credit rating companies also. So in the exam, if they ask you name 3 services provided by CRISIL, copy this answer. Name 3 services provided by ICRA, same answer, copy paste, because they are almost doing similar activities. With each agency may have 1 or 2 specialization in certain areas also. Similar business model. One was not enough, so over a period of time few more entities we have added in our country, but not too many also, because then in the process of competing with each other they will dilute the quality and independence. Is it right? If there are too many sellers in the market, then there is going to be some manipulation of the market to get the bigger share in the market. So therefore I think right now we have only limited number of reputable credit rating agencies in India. So credit rating, there are 3 functions they are mentioned in the note, 3 main functions of a credit rating company. One is, as the name suggests, their main function is credit rating, that is why they were created, but they also provide information service, and if you see the next page, they also provide equity research service. 3 main services provided by almost all credit rating agencies world over, not only in India, world over. 3 main service. One is credit rating of the instrument, then information service, and the third one, equity research. Okay. So show me that book. Credit rating. What is credit rating? Credit rating means rating of some instruments, especially debt instrument. In India, the debt instruments are divided into 3 categories. Short term, in your book only 2 are written, but there is a medium term and long term also. Short term, medium term and long term. So that the investor will accordingly be guided that this is a short term instrument, this is the risk. This is a long term instrument, this is the risk, this is medium term, this is the risk. So what is credit rating? Is basically a view expressed by the credit rater on the ability of an issuer of a debt to make timely payment. So credit rating is basically a relative ranking of the credit quality of debt based instruments. Same thing they are repeating again and again. You might get bored at certain point of time because same sentence will come again and again. It is the ability of the borrower to pay the interest and principal in time. That is what is expressed by the credit rating company. Now for your information, you will be surprised to know that we didn't have a credit rating company for many years. The first credit rating company, CRISIL, was formed in 1988. You will see in paragraph 10 after a few pages. 1988. That means from independence till 1988, there was no credit rating company. But now we have understood the power of market. Companies raise money not only from banks or financial institutions. They approach the capital market for raising money. But when they approach the capital market, large number of general public gets involved. They don't have time and knowledge to do the evaluation. They are lured by these big companies to invest and then they get cheated. To protect their interest, to give them confidence and even to make the corporate borrowers more disciplined, credit rating was started. So 1988 CRISIL started and then few more companies came. So after the liberalization of the Indian economy in 1991, credit rating agencies started playing a significant role in the assessment of credit quality of debentures and bonds issued. The process of credit rating also reinforces the faith of investors in debt-based instrument issued by corporate. I'll explain this line. A company approaches you, say Tata Motors Limited approaches you and says, we are coming out with a debenture issue. Kindly invest. We are going to offer you 11% interest rate. Scenario number 2. Tata Motors Limited comes out with a debenture issue and says our debenture has been rated by CRISIL. CRISIL is a reputed credit rating company, independent company, and they have rated our instrument AAA. In which of the two scenarios will be more interested in investing? In first scenario, the probability is less, but the moment you see the credit rating AAA given by a reputed agency CRISIL, your interest in that issue will go up and you might invest also. Is it right? But it also puts a lot of pressure on companies nowadays. If you want to get a AAA rating, you have to have a good history. You should have honored your past commitments. You should have good management, good business model, history of earnings, good liquidity, etc. So therefore, management who wants to raise money in next 5 years, if they have a plan, from right now only they will work efficiently, ethically to ensure that they get good credit rating in future. Understood? So credit rating is a kind of, let's say, a discipline oriented scheme for the management. If they are not disciplined and if the credit rating is really genuinely an independent company, they can give a poor rating, B, C, D. And the moment the investor sees either B, C, D or D, said Tata, I don't want to take so much of risk. Otherwise you have to give me double the interest. So if AAA bond gets 9% interest, 10% interest, a CD bond you have to issue at 16-18% interest rate. And that too you will not get the investor, probably. So next is information service. These credit rating companies give lot of information. They are doing a lot of research. Companies need information in certain sectors. Like an MNC wants to enter into India and they want to enter into, say, retail business, online retail business. Will they invest directly $1 billion here? No. What will they do? They will do research. They will try to obtain information about that sector. Is it right? And then they hire some reputable credit rating companies for that purpose, or investment banking companies, as we discussed earlier. They will tell them, this is what is my agenda and we want information on retailing business or e-commerce business in India. What is the potential, growth, profit, and these people give them service, information service, which is also big business nowadays. So I will show you one research report of one company called CLSA on India's $1 trillion deal on infrastructure spending unleashed. This is a research report. presented by one company. It's not a credit company or credit research company, but it is a similar report what CRISIL or other companies also prepare. Is it right? तो इसको इधर लो. दिख रहा है. You'll get some idea. Okay, how much detailing they do. You can call it as an equity research report also on India's infrastructure sector company. About 200 pages report is there. So now let us go through it. You'll understand. The broad objective of the information service will be to make available information on any company. Suppose you want a detailed report on Flipkart. Okay, tell them. And they will do all the R&D on Flipkart, and they will tell you this is this company's business model, revenue model, profit, growth. Then any local body you want, any particular city, industry you want. This was a report on infrastructure industry. Then any sector required by the business enterprise like education sector, power sector. They will prepare the report on that. They'll prepare the report on that. In fact, they have to visit the different type of people and take their interviews, understand their views, etc. Credit rating agencies through detailed analysis will enable the users of the service like individual. Who are the beneficiary of credit rating services? Individuals like you. Then mutual funds who invest big money, investment companies who invest big money, then residents or non-resident. In fact, all investors who have to invest their money, whatever may be the category of that investor, they benefit from credit rating to make informed decision regarding investment. So I started the chapter by saying when you want to watch a movie, you see the rating. When you want to make the investment, you see the rating. You can ask anybody who invests in debentures and bonds, do they not review the rating and then invest, or they just simply invest blindly? So they will say, no, we have also seen the rating. CARE also prepares credit reports on companies for the benefits of banks and enterprises, business enterprises. Sometimes banks want specific report on companies, whether this company or this group should be given loan or not. So they can give you that report also. So it benefits banks, insurance companies and other business enterprises by being cautious in granting loan or investing in debt security of a company. And the next is research. It is called equity research. A very attractive area for young CA candidates. Equity research, as the name suggests, means you have to do a lot of analysis of the equity shares of the company. Past record, future prospects, management, growth, government policy. And after doing the equity research report, you have to prepare a report. And in that report, you have to suggest to your client whether this company is worth investing or not. Is it right? So I will just show you the equity research on a company, front page only. Okay. So this is the equity research on a company called Thermax. So if you see here, they have given the summary of this company and they write a conclusion whether this company is worth investing or not. On the top they write also. Here it is written underperform. Can you see underperform is written? Yes or no? Underperform means it's not expected to do very good. So this is like a suggestion to the investor that you can sell actually. Yeah. Okay. One more I will show you. Power grid company. Here it is written at the top, sell. So what is the recommendation of this equity research report? That is, the prices are going to fall in their opinion, and you should sell it because the prices will fall. So before the prices fall, you sell it and come out, make profit now. So this is a small example on equity research reports, and this is quite detailed. It runs into many pages. So equity research covers detailed analysis of major stock exchange and identification of potential winner and loser. Potential winner, where the prices are going to rise. So they write something: buy, sell, underperform, and losers. So what will you include in equity research report? Judging them on the basis of industry, economy. What is the state of economy? What is the state of this company? What is their market share? Market management capabilities, international competitiveness, and other relevant factors. Other relevant factors will depend on what kind of company they are analyzing. If it is a telecom business, they will have a set of factors they will analyze. If it is a power company, there is another set of factors they are going to analyze. And they are going to compare not only with Indian counterparts, they will compare with international counterparts. And they not only look at the current scenario, they also look at the future scenario of that business. And then they give the recommendations. Okay. Next paragraph, objective of credit. Already discussed. It's a repetition. Objective of credit rating of obligation of companies, guiding investor regarding the risk of investment in a debt security as to the timely payment of interest and principal, creating awareness of the concept of credit rating among corporation, merchant banker, broker, and regulatory authorities. That means in India the awareness is still on a lower side. It helps in creation of environment that facilitates debt rating. The advantage is that companies also will have to be more disciplined now, because in order to raise funds, they need good rating. To get good rating, they have to perform better. Inculcating a positive environment regarding investment in debt securities. Understood? With good credit rating, it is easier to promote your issue, easier to raise money, and helps in creating confidence in the minds of the investor. That was the objective. Why credit rating companies were started? To create confidence among the investor. Don't worry, there is somebody who has done the independent analysis, and in his view it is a good investment. Then lakhs of people will come into the fold. Enable the companies to be quality conscious. Continuously I am repeating, regarding their securities, and creating a positive pressure on them to fulfill their debt obligations. Is it right? Now, types of credit rating, again just a list. What are the instruments or situations when credit rating is required? So banks and financial institutions need credit rating and are credit rated also. IPO grading. Earlier in India, IPO grading was compulsory. Now it is optional. Structured finance rating. That means if any specific, customized product is created, that can be rated. Structured finance. Sub-sovereign rating. Government and government bonds are rated. Sovereign is government. Issuer rating. Companies are rated. Insurance company and CPA rating. CPA, not me, just certified public accountant of USA. That is just a degree. Here CPA means claims paying ability. Write down there, some space is there on the right side. CPA in the context of credit rating means claims paying ability. Institute does not bother to write the full form also in their material. But in the exam they will ask. Credit paying ability ratings are exclusively assigned to short-term insurance reinsurance and healthcare companies and rate the ability of the entity to meet its policyholder oblique member and assumed reinsurance obligations on a timely basis. Nowadays, even insurance companies in USA, I don't know about India, I have to check, have to get rating. That means their ability to settle the claim, and then the public will go to that insurance company whose rating is high. Otherwise, many insurance company will give lot of promises, but when it comes to settling the claim, they will not. Okay. I am also one such victim. They have not settled my claim so far. I had gone to Hong Kong some years back, and then I fell ill. So I got a doctor's bill there, big amount. Only for one checkup they charge 6,000 rupees in rupees terms. Okay. They will just make you sit like in India. They do the normal checking, but it's official. It's a very sophisticated hospital there. It is better than India's 7-star hotel. Okay. Yeah. And then they will give you a bill, which you come to India, submit to the insurance company who had given you the health insurance, but they will not settle. They will say, this does not fall under our jurisdiction. The name of this is not mentioned. This is not stamped, etc. Are you going to go to Hong Kong again to get it stamped or do the respective formalities? Corporate ratings. Next rating, corporate rating, infrastructure rating. So there are so many. Don't write in the exam movie rating. That is also a rating, but it is not a credit rating company's job. Corporate governance ratings. These are the areas where credit rating companies can be used and fund credit quality ratings. Okay. Now the last paragraph we'll discuss today is usage of credit rating. Who are the people who use credit rating and how it is useful to them? Very important. In the exam they have asked this question. Who are the beneficiaries of credit rating? Who benefits from credit rating? 4 type of people benefit from credit rating. One is the investor like you, who don't have time, energy, resource, knowledge, okay, to do the research on his own. Here is getting a free information, free. They don't charge normal investor anything for credit rating. The cost is borne by the company. Do you pay any amount for credit rating? No. And then the investor, after looking at the credit rating, can take an informed decision. He understands the risk better. According to his risk taking ability, he will decide to invest or not. And sometimes instead of parking his money in low income generating areas like saving account, current account or a FD account, why not to invest in a corporate bond or debenture which gives you a little higher rate of interest than this kind of products? But then his confidence will be built up only if he sees a good rating in that instrument. Okay. He gets an independent, professional and genuine judgment on the credit quality of the instrument. That is a benefit. And what about the corporate borrowers? Do they benefit? Yes. If they get good rating, it increases their confidence. Now they can confidently enter the capital market. Not only that, if credit rating is very good, triple A plus, the interest rate is very low. And they use it as a marketing tool also. On TV you will see, this is triple A rated bond, invest, offer will close on this date. But if it is a D rating or C rating, then they will not use it as a marketing tool. Even foreign companies invest in those bonds and debenture or associate with those companies whose instruments are good rated. And last point I am repeating, it encourages discipline among the corporate borrower. What about the government? Is the government also a beneficiary of credit rating? Yes. What is the main objective of a government of a country? Growth, development. Growth and development will be faster when the savings of the people, which is idle, can be channelized into productive investment. You have 1 lakh rupees in your current account or a saving account which is not doing much, or you are just keeping money idle in your home only, right? Instead of that, if you invest in the debenture, bonds, fixed deposit, commercial paper, don't you think that money will go into productive channel? Because corporates will use that money for providing infrastructure or creating factories or services, software, technology. But you don't do that. Now here, if there is an investment rating, credit rating, you will be tempted, motivated, encouraged to invest. So are you not helping the government indirectly? This is what government wanted. Okay. Government wants that we should grow. Productive investment should be made. More and more investment should take place. If you have credit rating which is genuine, independent, it will encourage people to invest in such bonds and it will convert your idle savings into productive investment. Government can also formulate guidelines and policies with respect to investments. Okay. And the last is the intermediaries. Okay. Suppose you are a broker. Example, you are a advisor. You are a merchant banker. You are the one who has to sell the security to the investor. It becomes very easier for you to market that instrument to the investor. Yes or no? If the instrument is AAA rated, you can call your investor on the phone. Okay, Jignesh bhai, this bond has come. Please invest. It is a AAA rated bond. The issue will close day after tomorrow. Then don't tell me I have not informed you. So then Jignesh bhai say, okay, 1,000 bonds. Okay, fill the form. I'll send you the check. But if the bond is poorly rated, then you cannot market it. If there is no rating also, it becomes difficult to market that product. That is the benefit of credit rating. Okay, so now we will continue in the next lecture.